Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, March 8th, 4:50 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an overall uptrend, albeit with caution, as we've broken back below the 21-day moving average across 4 of the 5 indexes. NASDAQ 100, which was the laggard for so long, continues to be the leader. Check over here at the trend gauge. Leaders acting just fine, mixed bag today, but for the most part, holding up fine, not breaking any serious sell signals. Some dipping below the 21. We'll see if they can get back above by the end of the day, but just as many continuing to show exceptional strength. Short term, we're at neutral, as I mentioned, for the 5 indexes below the 21. The NASDAQ 100 undercut but reclaimed by the end of the day. Medium term, still showing bullish. Dow lagging below the 50-day moving average. Mid caps and small caps undercut and reclaim their 50-day moving average by the end of the day. Long term, neutral, all 5 indexes above their 200-day moving average, but the slopes of the line flat to basically trying to turn up. In fact, the S&P 500, it takes 3 days for it to go up a point, but it did tick up a single point today, so it's showing higher when we go to the tail of the tape. But for the most part, these 4 are still basically flat. Mid caps visibly turned higher on the 200-day moving average, the slope of the line. That's important because uptrending moving averages tend to provide more support when the price pulls back to them, kind of like you saw today with the 50-day moving average and the 2 indexes, the mid caps and small caps, that pulled back into it. So what just happened today? Powell on Capitol Hill again started a sell-off, but a nice close salvaged the day, although the Dow continued to lag. I'm going to show what's causing the Dow to underperform this year when we get to the charts. For the day, G6 up 0.19%, S&P 500 up 0.14%, NASDAQ 100 led up 0.5%, Dow down 0.2, mid caps and small caps just barely positive. Global diversified 60/40 stock and bond up 0.15, in-house GROTECTION up 0.20. We'll get to the tail of the tape. And then charts, let's get right into it, and let's start off with talking about what we do here at Revere Active Management. We take a look at the 5 major indexes and leading stocks, and based on various technical indicators, that tells us how far to be in or out of the market. Ideally, when we're trending above all the moving averages and they're stacked shortest to intermediate to long, we have as much money in as we are comfortable being in the market. If we start to break below various levels, we start to get more defensive. We get back above it. We get more offensive or add to our positions, always with stops in place. And the key level is that black line, the 200-day moving average, because all bear markets occur once you break below the 200-day moving average from an uptrend. The average till you break is about 12%. It was about 9% off the top from this most recent one last January to October. And then it's what happens when you get back below there is what we are. Our number one job is to avoid these major losses, and then the gains take care of themselves when the market gets back to a healthy posture. And if you're interested in this approach, give us a shout. You can email me, don@revereasset.com, or my partner, Dan Stewart, dan@revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. So what we saw today, basically we're closing just below, again, just below the 50-day. The 50-day is rising by about 3 points a day. We close right below it, but again, if you look at SPY, VOO, IVV, or SPLG, or those are the 4 major S&P 500 ETFs. We're a couple cents above it. And if you look at the S&P, we are just below the 50-day moving average by about 5 points. So basically, let's say we're right on it. And made new lows. over below yesterday's low, but reclaimed it and finished positive by the end of the day. Let's go to a 5-minute chart here, and you can see uh, basically we opened flat. This was where the JOLTS report came out. That's job openings, and it showed more job openings than were expected. The market immediately sold off on that. This was also when Jay Powell reiterated his opening statement and started taking questions from the House today. Yesterday was the Senate, today was the House. Very choppy, tight range, but very choppy in the open. We tried to make a higher high above this 4,000 level twice, which just so happens to be what the area that we held yesterday before breaking down. So this is just a classic case of a transition from one day to another, and what was support becomes resistance. You see it all the time. Late in the day, we rallied up to 39.95 before pulling back a little bit. So for now, this 4,000 is acting as resistance. Very close to theirs, 39.97 is the S&P 500 50-day moving average. A couple times today trying to get back above 39.80. We were not able to. And what was 39.80? Well, it was late yesterday afternoon's support. We broke it several times. Then when we finally started selling off on this 4,000 level, we couldn't get back above it until late in the day. Kind of saved the day. So there's your S&P 500. Let's go back to a daily, and let's take a look at the NASDAQ 100. Undercut and reclaim of the 21-day moving average today, and it is sloped the way you want it to be, drifting higher. So undercut and reclaim, positive close. This was the leading index on the day. Let's take a look at the Dow, which was basically red all day, closed well off its lows, but rejected at the 50-day moving average 2 days ago. Declining 21 has sliced through the 50, 1.3% above the 200-day moving average. Bouts of relative weakness continue to hit this index, especially weak during January. But looking at the overall chart, this is the weakest index. Now, let's note the stochastic also tried to break above oversold, coming back to oversold based on the action of the last 2 days. Let's check that very quickly on the S&P 500. Not quite as bad. You can see it hook up a little bit because of this slight positive close. NASDAQ 100 looks even better, making new highs as part of this recovery on the stochastic, even though price is not. Let's go to mid caps, which were leading for a while, but not after these. This basically is looking at as a false breakout above the 21-day moving average, but we did bounce, undercut, and reclaim the 50-day moving average today. The line is sloping up on that. Note the relative weakness as we rolled back over into oversold territory here. IWM, same thing, very similar setup, failed one day above the 21, undercut and reclaim by the close of the 50-day moving average. So good stuff there. Again, the stochastic not positive. We need this to hook back up and kind of do what it did here, which would provide. Well, this is reflective of what price is happening. So I'm not going to say that a properly configured stochastic is going to pull the price higher, but it's going to reflect what's going on relative to what went on over the past 14 days. Let's go to the VIX. Even though the index was red until the last 30 minutes, the VIX was also red. It ran into the declining 21-day moving average. The VIX is doing its job, and people are saying that this is broken, but it isn't. Really, what this is supposed to be is a forward look at the next 30-day volatility. The market hasn't been overly volatile. You're not seeing massive swings. You're seeing a fairly tight range action, but it's either trending slowly higher, or in the case since February 3rd, trending slightly lower. Since the employment number came out on February 3rd, which sets up this Friday's jobs report as a very big catalyst that we'll be looking to see the reaction to that. VIX, how about the dollar? Dollar was up and down today, basically not did in a tight range, basically closed unchanged, sitting on the 200-day moving average. You can see how tight it traded. Looking at this 5-minute chart, not a major impact on price today. Let's switch to bonds. Bonds were somewhat volatile today. The TLT got above the 21-day early and faded back below it late. We took off half of our TBT when this got back above the 21, but by the end of the day, closed back below it. Um, when you sell something, this is something you don't have to, it doesn't have to be an all or nothing thing. I've found so many times that when I was considering taking off an entire position, I would have been better off just selling half of it and letting that other half, which may hold up. It reduces risk and it makes it easier to get back in if you hold on to something and it starts working in the direction that you intended to in the first place. So you can manage risk by letting go of a part of it and then seeing how things close on the day. I can't tell how many times I've seen that happen. Okay, so that's TLT, that's longer term bond. Let's go to the overall bond index, BND, down on the day, meaning overall yields were higher. Yields actually were mixed on the day. Let's go to junk bonds, JNK, down for a second day. LQD corporate bonds, barely down on the day. Let's go to the yields TNX, up a bit on the day. We still have this island top here on yields. So we finished near the high of the day on yields, but still below this 4 level on the 10-year, although shorter terms, I believe the 2-year is above 5. If I'm not mistaken, let's go to 30-year TYX. You can see the difference. The further out the duration goes, the lower the rate. Very clear that we've got an inverted curve. FVX is the 5-year. This is showing about 4.33, riding that ADMA higher on the yield. Still not as high as back in October, but trending higher nonetheless. The curve getting more inverted this week. On Powell's testimony. Let's flip to silver and gold now. GLD made a slightly lower low close, but again, fairly tight range today with the dollar trading in a tight range. GDX also down on the day. SLV also down on the day, making lower lows. And Bitcoin, there's some news late on Silvergate, a crypto bank, is they're just going to declare bankruptcy and sell off the banking portion. And might as well bring that chart up now. SI's down 35% after hours. We made some nice money in Silvergate at the peak in this run here back in the 20s. So this thing has gone from a high of 227 down to $5. This is why we have a sell discipline. Things aren't just, you just don't hold them forever. And there's very clear technical sell signals here, starting with this big gap down here and then failing into the declining 40-week moving average on this move up. Brutal. I don't know why anybody would try to squeeze nickels out of something like that. It's like picking it up in front of a steamroller. So those are the major indexes we covered. Let's go to the tail of the tape now. And hit the highlights. You can pause things here. Mixed bag on the stochastics. Bull case, still we need to reclaim the 21. We've got our line in the sand here. The 3-2 lows, S&P 39.28, NASDAQ 100 288. So before the open, ADP stronger than expected, not good for the indexes. Then the jolts, stronger than expected, not good for the indexes, but we did bounce after the initial knee-jerk low. But the bottom line is that between that and Powell's testimony, there's now an 80% chance of a 50 basis point hike between now and when the Fed meets in 2 weeks. It's Wednesday, the 22nd. A lot of economic data will come out before then. We've got the jobs report, the NFP report on Friday. We've got CPI and PPI next week. Day count, we're basically at zero. When you go down, make a lower low, and close back into the candle of the prior day, it resets the count. The best way I found to handle it is to just call it the 0 day. Second day below, the 80 MA and the 21 EMA, positive late action, saved us again. Here's the focus list. We'll go through some of these. In-house, we trimmed TBT. I said when TLT got made that break of the 21, and we also trimmed RBNC, which was a laggard today. The net is that we're still at basically even with the S&P 500 on our open market risk. Bottom line, nice close saves the day. NASDAQ 100, mid caps and small caps, all undercut and reclaim key moving averages, and the Dow lagged. So let's get into some charts now, and let's go right into, I showed Silvergate already. The strongest sector today were semiconductors. Note relative strength on semiconductors has made a new high before the price did. We closed at 421 today, recent high at 438, but that relative strength line is higher than it was when we were down at 438. Semiconductors very clearly continue to lead. Let's look at ELF. I want to revisit something I said a couple of days ago with this harsh move, with this, it was a bounce off the 21 and then a revisit down to the 21. And I said maybe it needs to set a base and re-pull back here, but uh, it repaired this pullback by undercutting, shaking a bunch of people out, note the high volume, and then strongly reclaiming the 21 and then following that up with a higher high. I consider this to be very bullish action on ELF with the undercut and reclaim of the 21 on pretty high volume. Let's look at a 5-minute chart here. You can see the big sell-off, big volume here at the beginning of the day, and then the immediate reaction. It's just saying that there's people like to set their stops right under these levels, and we undercut and reclaim it, and that says we got rid of the last of the sellers below the 21 and below the low of the prior day and immediately shoot back up. That's a bullish signal. We didn't buy it because of what the market is doing right now. We're in no mood to add additional exposure or risk. Based on the feedback we've been getting from the names that we're in, they're holding up, but they're not making significant progress. A couple are here and there, but it's a mixed bag. So ELF, I wanted to correct something that I said, that action changed my judgment on that. So let's go now to those 3 healthcare stocks that, in my opinion, are, well, not in my opinion, it's a fact, are dragging the Dow down. First of all, the Dow is a price-weighted index. The way that the Dow calculates its price is by adding up what all of the 30 components are trading at, and then there's a divisor. Right now, the divisor is approximately 0.152. So early in the day today, I added up all the prices to see what was going on. And then you multiply by 1.2. We were trading at about 32,800 at the time. Another way to do it is to take the price of each and multiply it by about 6.6, and then add up the sum of all those, and you get the same thing, which of course, because there's 6.6 15.2s in 100. So there are different ways of calculating it. So there's UNH. Let's show, there's the Dow. It's down 1% on the year. Here's the S&P. It's up 4% on the year. In the top 14 of the Dow are 3 healthcare stocks that are having horrific years. UNH, most expensive, down 11.24% year to date. Amgen, this is the 7th most expensive. And again, because it's a price weighted index, this means that its impact is significantly higher than something like Intel, which is trading around 26, or Walgreens, which is trading around 34. And finally, number 14 is J&J. These are down between 11 and 13.5% on the year. That is a cumulative negative 774 Dow points. The Dow on the year is down about 340 points. or 1.05%. So more than half of the total loss of the points in the Dow is just from these three stocks, with them being down as much as they are year to date. But it's the fact that they've got such high prices that it's impacting the Dow that much. Let's look at a couple of other stocks. Let's take a look at the lowest three impacted stocks. Intel only down 1.7% year to date. WBA down 7.71% on the day. Verizon, or on the year, Verizon down 4.75%, but these aren't even making a dent, as collectively these make up less than one. So 646 divided by 32,000. Let's do that math really quickly. So that's, if we add up, that's multiplying the prices of those three stocks and multiplying them by 6.6. It's 646 divided by 32,800. So collectively, less than 2% of the impact of what the Dow is doing is made up by Verizon, Walgreens, and Intel. This is just the way they do it. The Dow was very strong a few years back when Boeing was extremely high priced, but it just doesn't make sense to me that a stock can be doing very well. It splits, and its impact on the overall index gets cut in half if it splits in half. But I'm not the guy that runs the Dow. So let's take a look finally at a few charts. What did the best on the day out of the 21 over 21? And what did the worst? Ironically, we own three of the best. ANET making new highs on 77% above average volume, up 3.9% on the day. Next up, SMCI. We don't own this. Nice move above the 100 level. Third best, NVIDIA. We do own this, up 3.8% on the day. Next up, GFS. We do not own this, up 3.8% on the day. And then finally, TMDX continues to just be a champ, up 2.5% on the day. So we owned three of those top six, but we also own four of the worst five, but we're fortunate that our size is not overly big in these. So Airbnb had a pullback today after four nice up days, down 1.5%. Next up is Iridium. We only have a 1% size on this. It had its first close below the 21, but basically holding at the 50-day moving average on thin ice, however. Next up, Revance, RVNC. I talked about how we trimmed this from a 2% to 1%, also breaking below the 21-day moving average. And finally, Tesla. We only have a 0.5% position in this. These ones that we have a small position, it's a pilot position we're waiting to add. In the case of Tesla, we took some off into strength. We're waiting to sell this last little piece if we would get a serious break. But this 180 level, if you look at a 60-minute chart, was defended here all day today. This corresponds to the breakout level back here in February 1st, when it broke above the 180 level. Ran up to 220, pulled back, and is holding this 180 level now, and really continues to hold it. We would probably let it go if it breaks back below it, because the 50-day moving average is another 10% down. We're just not going to give it to there. And worst acting stock today in the 21 over 21 is AI, down 5% on the day. 3 down days after one huge up day after earnings, giving back most of the low that day was around 24. We're all the way down to 24.82 after touching 30. Very volatile stock, sitting right on the ADMA. That's going to wrap it. As always, love to hear from you. Emails don@revereasset.com. Need to remind you what type of market we're in right now. We're transferred back from mild pullback to mild correction, as we're more than 4% off of the high. Good close today, good undercut and reclaim of key moving averages by three of the indexes. We need to get back above the 50 and back above the 21 on the S&P 500. But basically, the way we allocate the portfolio is pretty much in line with S&P. Some variances depending on how things are acting, but we're in line considering what the market is right here. If we start breaking more key levels, we'll get more defensive. If we start outperforming and breaking above resistance levels will add risk on. There are still a lot of good stocks acting well, setting up decent risk reward areas. We're ready for either outcome. And a reminder, it's not how much you make in the markets, it's how much of that you can keep. And with that, I will wrap up Wednesday, March 8th. This is Don Vandenbord with Revere Asset, telling it like it is. Just the facts here at Revere. Numbers don't lie. Percent returns don't lie. Moving averages don't lie. Everything we make is fact-based. We try to eliminate emotion as much as possible. Thanks for listening and have a great day.